Morning, Nick.
Hello, Peter.
Nice to do this in person.
It's our first one.
It's our first one after 8 previous remote interviews. We get to sit down in person here here in Miami.
That was blowing my mind. But this might as well be remote because you're so far away.
Yeah, that was the dilemma. Otherwise, we'd have been, if we put it the other side, we'd have been super close.
This is like a medieval banquet or something.
This is what I had with Weinstein. We were about this far apart. Travis in the middle. That's how we justified it. We did have a big discussion last night about this. Anyway, man, you all settled here in Miami?
Yes, sir.
In a free state?
It's quite free, yeah. I mean, we're not actually in Miami.
I know.
I was complaining about that.
I know. We're in Hollywood.
That's right, yeah.
Without the films.
We have a Hollywood in Florida.
So listen, there's a whole bunch of stuff I want to talk to you about, which you're aware of. My brother works with me now, and he's going down the Bitcoin rabbit hole. It's been really interesting to watch him soak it all up and ask questions. And that one of the things he keeps coming back to me, he's been saying is like, okay, where does this all lead? Like, okay, because I think over the last year, Bitcoin has become like this whole much bigger thing now, especially with El Salvador and what MicroStrategy has done. And some of the predictions people have about Bitcoin is coming true. But he's been questioning to me, and we've been having a lot of conversations about, okay, what does this mean? You know, next year, 5 years, 10 years. And I really obviously like and respect you and wanted to dive into some of these things with you. So I've got a lot to discuss, as you know.
I'm ready to make some wild, unfounded prognostications.
Let's do it. Okay, so starting point really with you is just to find out a little bit about how do you taking everything of the last year, not just with Bitcoin. I mean, a lot has happened with Bitcoin. I don't think any of us saw what MicroStrategy did with coming, and I never saw Tesla putting Bitcoin on the balance sheet, and I certainly didn't see El Salvador. So much has happened in this last year. Like, how do you take it all in?
I mean, we wouldn't be here if we weren't like wild optimists, right? Mm-hmm. So to a certain extent, I feel like we did expect these things to happen. We didn't know what precisely would happen. We didn't know the nature of it, but we kind of figured something crazy would happen, right? I certainly did. I mean, I didn't expect that a business analytics company from Tysons, Virginia would buy 120,000 Bitcoins. But it doesn't surprise me that what they did, right? And the nation state angle with El Salvador, I didn't see El Salvador legalizing Bitcoin or making it a currency or mandating its usage. But it doesn't surprise me now, really. And I know this is a real Captain Hindsight moment. It doesn't surprise me that this is the progression. This was the progression, is a necessary progression for any monetary good that's going to reach global stature. This is the path it has to take. If you get from zero to where gold is today, there's hundreds of millions of households that own gold. Virtually every major central bank owns gold. And, you know, it's just a absolutely mainstream savings device. So if Bitcoin's going to get there, it'll have to be acquired by governments and corporations. So we couldn't know how it was going to happen or how quickly it would happen. Certainly the acceleration has surprised me. But I tend to think this was Bitcoin's destiny. It's realizing its destiny.
Yeah, let's talk about the regulatory side of things, because that lens has always been on Bitcoin, continues to be on Bitcoin. Obviously, within El Salvador, they have little to no regulation with regards to Bitcoin, no taxation of Bitcoin. It's a very pro-Bitcoin country. The US, compared to where I am in Europe, is fairly pro-Bitcoin to a certain extent, and you have specific people within Congress who are pro, some people are against it, but it feels like we're way beyond any idea that the US government would ban Bitcoin. We do have some slightly different views in Europe. Sweden wants to ban Bitcoin because of the mining threat, even though I think it's one of the largest energy companies. I'm not sure if it's a state energy company, but one of the largest energy companies has said, no, Bitcoin is really good for energy. But Europe seems to be kind of quite behind the US in terms of Bitcoin. And then obviously the other side, we have countries like China and Bolivia where Bitcoin is banned. Where do you see regulation heading?
Yeah, I mean, it's funny that we're nervous about regulation. I mean, to ban Bitcoin isn't to demonetize it, right? Mm-hmm. When gold was banned in the U.S. or private ownership was banned, gold wasn't demonetized. it continued to hold its value. It just became more difficult to get access to. It's the same thing with Bitcoin. I mean, Bitcoin still has a monetary value in China where transacting in Bitcoin is illegal or discouraged. So, I mean, in the US, Bitcoin has been pretty well understood for almost a decade now. The IRS understands it, treats it as property. FinCEN understands it very well, the Treasury. The SEC, they don't have much to do with Bitcoin because they generally treat it as a commodity. The CFTC regulates certain markets that trade Bitcoin, especially derivatives. What could happen would be that the exchanges fall under more stringent measures. I kind of expect that to happen. I think the major spot cryptocurrency exchanges in the U.S. Will be specifically carved out by legislators and will be subject to tougher rules, especially as it pertains to new token offerings, anything like that, things that kind of resemble securities in a way. But Bitcoin doesn't resemble security at all. And we have, a very hawkish SEC commissioner who is ambitious and he's determined to make his mark, right, on the crypto industry. But whenever he talks about Bitcoin, he tends to carve it out and say, yeah, Bitcoin to me, doesn't have a single entity that administers it. It doesn't, it doesn't have this strong nexus of centralization. So he carves out Bitcoin in the taxonomy as compared to novel tokens and things like that. So from a regulatory perspective in the US, it's very positive, I think. The thing that would make me a little nervous would be a regime whereby the major exchanges and custodians are treated under new federal regulation, which would make it more difficult to compete as an exchange or brokerage or custodian, and would entrench a handful of larger firms, which would make it easier to regulate and easier to ask those exchanges to sort of de-anonymize their users or pass really tough KYC and stuff like that. I think that could happen for sure.
Yeah, one of the things that seems to be give a little bit of protection to Bitcoin now, not a lot, but there seems to be a growing number of people within Congress who have an interest in Bitcoin. Obviously, the darling for all of us is Cynthia Lummis, who's been a vocal supporter of Bitcoin for quite some time, but we've even seen people like Ted Cruz, and now there's like a growing number of hopefuls who are looking to get a seat in Congress. We've been reached out to by people who are campaigning or on the campaign trail, who all seem to be supporting Bitcoin. Do you think this is a hack, or do you think these people have genuinely got an interest in Bitcoin? And the reason I ask if it's a hack, because if you become a vocal supporter of Bitcoin, you suddenly have this whole community that gets behind you. Ironically, a group who are historically perhaps anti-state, but at the same time, it is happening. What do you make of that?
Yeah, I mean, I've had the pleasure of meeting some of these representatives and senators that espouse Bitcoin ideals, and I don't know if they're politicians, but they seem pretty genuine. I mean, there's varying degrees of sort of endorsement, but are absolutely growing numbers. There are growing numbers. Obviously, on the Senate side, we've made a lot of strides this year. It's not just Cynthia Lummis banging the drum anymore. She's been joined by Ted Cruz, who put together a very impressive defense of Bitcoin and Bitcoin mining in Austin earlier this year. She's been joined by, I want to say Ron Wyden is also a pro-Bitcoin senator. There's others. Maybe I'm getting mixed up there. On the representative side there, especially on the Republican side, you look at the Financial Services Committee in the House, there's a number of representatives that are overtly pro-Bitcoin. And there's a number of hopefuls in both the House and the Senate that are extremely pro-Bitcoin. So I don't think, some of it might be contrived. Some of it might be playing to the Bitcoin demographic. But it's a genuine movement. And I don't know what the estimate is precisely, whether it's 20 million or 40 million Americans that own Bitcoin and digital assets, but it's a very material amount.
Do you think there's any risk that Bitcoin becomes a partisan issue in that it feels like there's certainly more people on the Republican side who are into Bitcoin and support Bitcoin? I interviewed Erica Rose, who is a Democratic hopeful who supports Bitcoin, but the US has a very nice, neat ability to make any issue something to argue about across party lines. But do you think there is an opportunity to make this nonpartisan?
It's going to be a challenge.
Yeah.
It's very lopsided right now. There are representatives on the Democratic side that are pro-Bitcoin and that acknowledge the innovation that's happening and the importance. Ro Khanna in California, progressive, is a good example. And I know that's a difficult fight for him because his constituents, whenever he tweets about Bitcoin, his constituents get pretty upset. Darren Soto down here in Florida on the Democratic side has espoused a pro-Bitcoin position. I think you've even seen Eric Swalwell, sign on to some of these open letters, espousing kind of a pro-crypto stance. So they exist for sure. And I think the last hurdle for a lot of these people is going to be the environmental questions. And it's just a matter of making the facts known to them. I think the reality is less worse than is represented. But yeah, certainly some progressives will never, no matter how much data or information you present to them, they will never endorse or acknowledge Bitcoin as a valid thing. Because there's this neo-Malthusian trend going around now whereby energy consumption is believed to be morally bad. And so there's not a lot you can do that. To B, there's this indignation that, libertarians or Bitcoiners generally, made a lot of money in a short period of time. And C, there's a desire in some parts to wholly politicize financial services and create kind of a choke point on steroids by installing a CBDC, a central bank digital currency, which the Fed and the federal government controls and surveils really tightly and uses to exert more granular control over society and potentially implement progressive ideals through the mechanism of the currency, which is a power that the government does not have today, but I think would like to have, which is certainly the stance of someone like an Elizabeth Warren. So regardless of how much you stress the financial inclusion of Bitcoin or even stablecoins, she will resent that because her objective is to obtain just new, fundamentally higher levels of control over society at large through the mechanism of your currency. And so there's a certain set of policymakers that will never get on the Bitcoin train for that reason.
Yeah, I find Elizabeth Warren one of the most disappointing ones in that a few years back when Mnuchin was being questioned in preparation for his role working in government, she went hard on him. She went hard on Wall Street when she went hard on the relationship between the government and Wall Street. And I felt like she perhaps would be an ally, a loose ally, potentially a Bitcoin, but she's turned on it.
Yeah, it's the enemy of my enemy is my enemy in that case, right? It's not that, she's against banking and would thus be in favor of Bitcoin. Is that she's against banking because, there's a strain of thought, which is that banks should be effectively nationalized and, or commercial banking should be eliminated and the public sector, the government should take over. This was evident in the writings of the OCC nominee, Saul Omarova, who thankfully is not going to go through, but if you read her papers, it's the same thing. We should kind of eliminate commercial banking or sideline it because that's a buffer between the government and the people, and go direct and give people Fed accounts, accounts at the Fed, and then we can determine, who's able to spend money on things and what and when, and precisely determine how much money is in the economy and how deep negative interest rates go and things like that. So as far as I can tell, that seems to be the final objective here. And Bitcoin stands in the way of that.
Well, the logic of that is very anti-American.
I agree. I certainly think so. But when has that ever stopped them?
Yeah. You wrote a piece recently about the era of free banking, right?
Yeah, free banking has kind of come up a lot recently. Warren has referred to it. Gensler has referred to it. Members of the Fed have referred to it. Always in a pejorative, negative context. In the U.S., we had a period of somewhat unencumbered banking. It wasn't, wholly free, but they call it sort of the wildcat era, and they've been using it to demonize stablecoins because they allege that stablecoins are similar to the free banking era we had in sort of the 1830s to 1860s. And I don't, you can quibble about the analogy, but their point is there's this view that the free banking era was characterized by bank failures when they were somewhat unregulated, not fully unregulated. And it's used to delegitimize the private issuance of currency effectively. The problem is that the free banking era in the U.S. was not a truly free era. Banks weren't really allowed to branch out geographically and diversify their sort of depositor base, right? So if you were a bank in Indiana and your deposits came from farmers and there was a bad harvest that year, maybe the bank would fail. And so there were reasons you had these bank failures. Additionally, the banks had to hold securities issued by states in many instances, and they were forced to do so. And so that was also a cause of the bank failures. So there are valid reasons aside from just what are commonly alleged to be the main reasons around just private institutions being irresponsible, why these banks did fail in the era. Now, if you look overseas, if you look to Canada during that era, or if you look to Scotland, actually, for instance, you had very functional free banking episodes, which suggests that the private issuance of banknotes can work and can be a stable regime. And you don't strictly need a central bank. These episodes were stable. You had strong growth. You had minimal financial panics. So the focus solely on U.S.-based free banking by our current policymakers, in my view, is kind of ahistorical. And it's used to unfairly malign stablecoins, which in many ways do resemble the way that free banks operated.
It's kind of ironic, really, and one of the things I was talking about, I had a call with my brother this morning, was he was saying that in an era where you have so much control by government over the economy, there's so much central planning and controlling the economy, and usually very anti-monopolistic, that they do want a monopoly on money. Any threat to their monopoly on money is, as you've talked about here, they're using the free banking era.
Yeah, it's one of the great ironies that, money is the one thing where monopoly is believed to be completely acceptable, and where it's alleged that the private sector can never create a product that's as good as the government. Now, in what other realm would you say a state-produced product is better than what the private sector can come up with? And if you look at what's happening right now with stablecoins, for instance, not to, I know Bitcoiners don't like it when I talk about stablecoins.
I am.
But if you look at stablecoins, they're digital kind of dollar equivalents. They work, they settle immediately. There's 140 billion of them, 120 billion of them floating around, completely issued by the private sector. That is a digital cash product. And meanwhile, you have governments the world over trying to make those CBDCs and being very slow in doing so. So that's a great example of the private sector filling a gap, filling a need that the market demanded, where the state has not created an equivalent product. And will they ever create a product that has the same privacy and transactional freedom assurances as the private sector did? And my guess is no. Will we ever get a CBDC that actually resembles physical cash in terms of settling immediately, being private, upholding your free right to transact with whomever you choose? I don't think so. I've never seen a central banker put forth a CBDC model that doesn't have some sort of embedded KYC or anti-money laundering feature. So this is a great example of the private sector is already doing something that we know governments will not do.
Yeah, and Alex Gladstein has talked quite often about being very supportive of stablecoins. And I know, as you said, it's not hugely popular with Bitcoins because sometimes they exist on alternative protocols that we're not meant to support or be fans of. But he's talked about in specific countries, I can't remember, but I'll just pick out like Palestine or Lebanon, countries where there is where there's a poor local currencies collapsing, that these stable coins have been a lifeline for people. They've given, because Bitcoin isn't always suitable in that scenario because you need a stable currency in the short term. And so these stable coins have been very useful.
There's no contradiction between being a supporter of Bitcoin and stable coins.
No.
I don't believe so. I think they are different products. Bitcoin is kind of an unimpeachable thing. It's no one's liability. That's what's special about it. It's similar to gold in that respect. Gold is no one's liability. No one has to do anything for your gold to have value, right? Mm-hmm. Same thing with Bitcoin. Now, stable coins are someone's liability, right? There is an entity that has to sort of offer you something in return for your stable coin. Or there's an entity that has to manage an algorithmic peg. There's some residual risk in the system. That doesn't mean it's a bad system. It just means that it's managed. What we are seeing is a harmonization between Bitcoin and stablecoins, though, and this is overlooked. Why do stablecoins even exist? Because Bitcoin built and financed the infrastructure that they rely on, wallets, exchanges, all of that financial infrastructure that's mature now. What do stablecoins trade against? Well, Bitcoin in many cases, right? Because Bitcoin is this monetary substrate that is ubiquitous now. That makes the market for stablecoins. Some stablecoins are issued against Bitcoin, or they're backed with Bitcoin. So Bitcoin is kind of adopting this collateral, reserve asset role, and then stablecoins are increasingly the medium of exchange. And that's kind of where this is going, if I had to make a guess. Bitcoin is this reserve asset, this monetary medium that can extinguish any debt, and it's no one's liability. And then stablecoins is a slightly more risky, but very much more convenient transactional medium because there's no, from a tax perspective, for instance, transacting in something that's quote unquote stable is advantageous. People still use the dollar as their unit of account. That's not going to change. So that's one way to get to this world where Bitcoin is an important, dominant, and major reserve asset, but we still accept that people are willing to transact in dollars, and they, in fact, prefer to transact in dollars. And I see that as fundamentally more likely than a world where we redenominate everything in Satoshis and transact in Satoshis.
Okay, I agree. And I was with Michael Saylor yesterday. This is something he's been talking about a lot. And he talked about this in a couple of interviews. I've been out on Twitter, and I've seen the reactions of some people. It's like, no, we're here to end the Fed. We're here to end central banking. We're here to replace the dollar. And I don't find that logical in the short term. We can talk about hyperbitcoinization later on and decide whether we agree that's something that can or will happen. But right now in the short term, people need a stable currency in the short term, and they need a store of wealth long term. Yeah, I know for myself, and I expect for you, that Bitcoin is great long term. It's great to hold for years. But like from day to day, when you want to buy stuff, you need the dollar, I need the pound. So that idea of eliminating the dollar in the short term, I don't see happening. I do agree with this point, though, as there becomes wider access to stable coins or digital dollars globally, and they become more accepted, you could see other sovereign currencies fail quite quickly.
We will see other sovereign currencies fail. If you look historically, you get these clusters of sovereign currency crises, whether it's the Asian financial crisis, the Latin American financial crisis, the post-Soviet era. These aren't foreign to us. Everybody knows someone that's lost money in an Argentine default or the Greek default or Cyprus, or when there was hyperinflation in Eastern Europe, right? And this is all within living memory. We're not going back to Weimar here, right? These things happen frequently. And they tend to happen when sovereign debt levels are pretty high. And guess what? They're very high. And so we spent a lot of time bellyaching about the U.S. and, the unsustainable level of debt here, and how we're going to service that, and we're going to have an inflationary default or anything like that. But it's the rest of the world that ought to be worried. It's already happening. Look at the Turkish lira.
I know.
I mean, Turkey is a middle income. It's a regional hegemon. Like, Turkey is a powerful nation.
G20 nation.
Yeah, I mean, Turkey is strategically an incredibly important nation. They have a mature economy. They have a large population, a huge labor force. They matter. They're a power broker in the region, and their currency is inflating away to absolutely nothing. So, it can happen anywhere. I mean, Argentina was a wealthy nation, right? The Argentine quality standard of living in 1900 was pretty high, relatively speaking, right? Like Lebanon was a middle income nation. Now they're living in absolute poverty, and the currency is basically worthless, and it's a total catastrophe. But, these things happen. They definitely happen, especially post-1971. And so, are we going to have fewer sovereign defaults going forward or more? I would wager more, especially given that there just has been a global creation of debt and credit, and that has to resolve some way. And so it's not the dollar I'd be worried about. It's everything else.
Yeah, I think he said to me he predicts 120 currencies will fail. He thinks that the only survivors would be probably dollar, euro, pound, yen.
Yeah, 120 is basically all of them.
Yeah, it's basically, it's all, it's outside the top like 6 or 7 top currencies. But I'm like questioning how does it happen, because if the Turkish lira fails, they could just knock a few zeros off and start again, exactly what they've done in Venezuela. But do you have scenarios where other countries like dollarize on a stable coin? Is that a scenario that we see happening?
I think it'll happen, no question. Yeah, I've been expecting it. Right. Crypto dollarization. Yeah, I mean, because, look at the failure of dollarization historically. So look at Zimbabwe. They had a bit of a dollar. It was fits and starts. And ultimately, the government was able to successfully use the banking sector against its citizens to de-dollarize. Now, what's the difference with the crypto dollarization? Is that you hold your stable coins in your own mobile wallet on your phone. You don't have to hold your assets with a bank. And so you're insulated from the state weaponizing the banking sector against you. So because there's this bare asset nature of a digital dollar, you can successfully dollarize. I think you can more fully and completely exit the financial system in question. And if you look at stablecoins, they are proliferated globally. I don't know what Turks are buying right now, for instance, to get away from the lira. I would wager that it's a mixture of gold, dollars, and Bitcoin. And maybe, property, other assets like that. But I think a crypto dollarization is more enduring and more successful than a physical, Federal Reserve note-based dollarization, because of course you have to somehow get those.
Do you think it's
into the country?
Do you think it's also something that can come from bottom up? Because just thinking about when I went to Venezuela, it's kind of pseudo-dollarized without officially being dollarized, but it's pseudo-dollarized because people when you're there, they want your dollar. And Cambodia was the same. When I was in Cambodia, people wanted your dollar. It's like, will you pay in the dollar? So do you see it as something that rather than coming top down, it comes bottom up and people just request the dollar and just enforce that?
There's catalysts. I think the Cambodian dollarization was kicked off by the UN mission in Cambodia. But you're right, it's remained semi-dollarized. Venezuela is interesting. It's kind of a melting pot of currencies now, right? I mean,
it's 5, really.
The what?
Well, okay, it's 4 main. Well, you can dismiss the petro because it just was a complete failure. But it is the bolivar, which obviously is an absolute shit show. It's Bitcoin. It is the Colombian peso.
Right.
And it is, What was the fourth one?
I mean, I also heard that in some more remote parts of the country, people use actual granules of gold to transact with because there is a gold extraction industry.
Interesting.
And so, you know, you actually get some remonetization of gold.
Interesting.
But there have been bottom-up dollarizations. My favorite one is Ecuador in 2001, I believe. And that was, you know, most dollarizations are top-down. And it's effectively a desperate central bank says, okay, we're just going to peg our currency to the dollar or just adopt the dollar officially to arrest an inflation, which is delegitimizing them, right? Because they don't want a revolution. They don't want to, you know, be chased out of office. But in the case of Ecuador, it was more spontaneous. And there's a good paper by Larry White about this. Effectively, you know, talking about how people can force the hand of the government. And now compare the world of today to the world of 2000. The world of today is one where, you know, most people worldwide probably have smartphones. They have access to the internet. And they probably have a crypto brokerage locally that's either a peer-to-peer one, which is everywhere, or, you know, more sophisticated, centralized one. And through that, they can get access to digital dollars or really any digital asset they want. So it's a much more frictionless world in terms of engaging in currency substitution. And that's a much more dangerous world for sovereigns with unstable currencies. So I think under the old model, you might have a slow currency failure because people couldn't actually meaningfully divest from the currency because they had their assets in the bank. They can't get them out of the bank. But now I think your ability to divest is just faster and more aggressive. And so it'll take some of these central bankers by surprise that, you know, they're trained to think under the old model. But under this new model where maybe 200 million people have access to cryptocurrency and, you know, or already own cryptocurrency and multiples more have direct access to it should they want it, that's a more aggressive and dangerous world. It's a more difficult world of currency competition. And I think, you know, central bankers in Turkey, for instance, realize that. They see there's a vibrant crypto industry. They see that as probably part of the reason the lira is collapsing so quickly.
Well, Erdogan's he's declared war on cryptocurrencies. But the interesting part of it for me, Nick, is that I've thought a lot, long and hard about a Bitcoin standard. And one of the interesting things about Bitcoin standard is completely individual. I live on a Bitcoin standard now. Me and Danny were talking about it earlier, and that majority of my wealth is in Bitcoin. I still hold pounds. I still hold dollars when I need them. But essentially speaking, every time I have to make a lumpy purchase, something of significance, I do that through the lens of Bitcoin. So the great example right now is I'm looking to move house at the moment. Historically, if I bought a house, I'd want to put down the biggest deposit possible. Now I want to put down the smallest deposit possible with the longest mortgage possible and the lowest interest rate. And I want to hold in Bitcoin because I know it will outperform over that 25, 30 years of a mortgage. So I'm on a Bitcoin standard because I think like that. You know, MicroStrategy is on a Bitcoin standard. But with the dollar, you can personally dollarize now. If you've got access to stablecoins, even if you're in Turkey, you can choose, I assume, you can choose to convert your Turkish lira immediately to a digital dollar if you want. And you can live on that dollarized standard without the country being dollarized, which is why I'm interested in this kind of bottom-up approach.
That's what I think is going to be more popular. And, you know, we have portfolio companies that are doing brokerage for folks in Africa, for instance. And, you know, the most popular, transactional digital asset for folks in Nigeria, for instance, is probably not even Bitcoin at this point. It's probably something like a Tether stablecoin, believe it or not.
Interesting.
On a low-fee blockchain.
Tron.
Yeah, I mean, that's honestly what I've anecdotally heard, believe it or not. So, you know, there's something...
Justin Sun was right.
It's a brave new world out there. I mean, you know, maybe Tron is sufficient for that use case. That doesn't mean that, you know, there's no affinity for Bitcoin. There's no Bitcoin usage. There certainly is a lot. But for your cross-border remittance, for if you have an import business and, you know, your suppliers accept stable coins, things like that, it probably makes more sense to use a dollar-based stable coin than Naira in many cases.
I haven't spent enough time looking at stablecoins. I've been so focused on Bitcoin. Do you know what, interestingly, I've never really owned a stablecoin. I've never bought Tether, never bought USDC. I've just never bought or used one. I've had them given to me or put into wallets before. But my limited understanding is that the Ethereum bloat makes, and the gas fees makes using it as a digital dollar quite problematic, whereas that's where you talked about Tron. But are there other ways to get a low fee digital dollar? Can it be done on Bitcoin? I know it's been talked about, but I've not looked into it.
Yeah, I mean, Tether began on Bitcoin, on the Omni protocol. Only a couple billion, really, I think, were ever issued on Bitcoin, which is funny that people connect Tether to Bitcoin so much, because Tether is mostly issued on other blockchains, of course.
Yeah.
But, you can put a payload of data in virtually any public blockchain, and that can be the stable coin. It just has to be a claim that, the administrator can interpret. That's a trivial thing. So you have stable coins issued all over the place now on not just Ethereum, and it's increasingly moving beyond Ethereum too, due to the fees. You've got Tron, you have stable coins on Algorand, on Solana, on Avalanche. It's just all over the place now. And what's actually happening is the notion of a stable coin is being abstracted away from the underlying blockchain infrastructure. And so people reason about Tether or USDC without knowing or maybe even caring about what underlying blockchain it's transacting on. That's a engineering question they maybe don't care about. And so we're going to talk less about like making an Ethereum transaction, and we're going to talk more about a USDC transaction.
Right. So controversial question. How do I word this? If you're of the belief of a future world whereby it isn't just Bitcoin, which I am, which is a world of Bitcoin and digital fiat currencies, which are, as I said before, I see a short-term need for fiat currencies because you need stability in pricing, and Bitcoin isn't a unit of account now, and you need long-term Bitcoin for wealth protection and growing your wealth. Does there need to be an acceptance, therefore, of alternative protocols, or could this all still be done on Bitcoin? And are these protocols do have fair criticism for centralization and such, but have you become more accepting of these protocols?
I mean, I just have to live in the world as it is, right?
Yeah.
And that's a world where there's a number of other blockchains, and certainly many of those uses are pretty valid, including, for instance, stablecoins, which of course could be done on Bitcoin, but there's reasons why you might want that trade-off of convenience in exchange for more centralization. So I mean, that's I think absolutely valid. Am I sort of allocating my personal portfolio to these alternative layer ones? Like, definitely not. It's not clear to me why or how they would sort of accrue long-term value. But are these valid places to build things on? Unquestionably. And there's hundreds of billions of dollars of liquidity on these other blockchains. Have any of them come close to competing with Bitcoin in a monetary context? Arguably not, because they're not even really aware of the game that they're playing. They think that it's all about tweaking the monetary policy to make it attractive, when in fact it's about keeping your hands off the monetary policy to make it attractive. They don't seem to have understood that just yet. But certainly, there's abundant, block space for alternative public blockchains, and there's, interesting and important things being built there. No question about that.
So it feels like if we start thinking ahead, maybe the next few years, decade, possibly next couple of decades, that at a time where there's a massive loss in trust in government, and that is not just within the world of Bitcoin, it's like even my no-coiner friends who still don't buy Bitcoin are now becoming tired of the bullshit coming from government. At a time where we've got exponential technologies, we've got growth in crypto. I say crypto because we are talking about stable coins, and an increasing lens on the government because of the wild inflation numbers we've seen. And I know there's been wild inflation numbers years ago, but we didn't have an alternative apart from gold. I expect, therefore, the next 5, 10, 20 years that we're going to see a massive both currency competition but currency wars. Something Balaji talked a lot about.
And it's not just state currency versus state currency, and it's not just state currencies versus Bitcoin. It's state currencies versus Bitcoin and the full cohort of other alternative crypto assets. And that's kind of the reality we live in. And that entails a lot of, nonsensical asset creation. I mean, everyone is a currency entrepreneur now, right? And that's, normally a pretty bad thing to create a startup currency. But that's sort of what we have to accept. I think it goes with the territory.
Well, Danny earlier reminded me of our conversation when we did our whole series about the kind of that beginner's guide to Bitcoin, and you and I covered altcoins, and I can't remember the exact words, but Danny, are you mic'd up? Can you remember what he said?
It was that new money shouldn't come around every day. It shouldn't be easy to create new money.
Yeah, like Bitcoin. You talked about how Bitcoin had been through a hell of a journey. Like it shouldn't have survived. I think your words right. He shouldn't have survived everything it's been up against, but it did, and that's the point. Like money should be hard to create.
Yeah, it shouldn't be a trivial thing to create a new currency.
That's it. Yeah.
Because you're trying to create a new system of trust. I mean, how can you possibly contrive that out of thin air? I mean, Satoshi had to do so much to win our trust, right? Everything open source, everything with fair warning, full disclosure, create the most auditable monetary system ever, and then leave the project. What other digital asset or cryptocurrency has done even 1/10 the things that Satoshi did to convince us that this was a legitimate and fair thing? I mean, I haven't seen anything remotely approximating that. I see a lot of breaches of user trust, and I see a lot of extraction of wealth from people that put their trust in the creators of these alternative cryptocurrencies. I see a lot of intervention. I see a lot of tweaking of the money supply and constant changes to the monetary policy. I see a lot of centralization. And it's not just centralization is bad for the sake of centralization. It's because it allows these protocol elites to monetize their advantage, to monetize their proximity to the protocol at the expense of the users. And there's plenty of examples I can give there, but all of the inflationary negative dynamics we hate about fiat currencies, they're present times 1,000 in sort of the altcoin space. There's no question about that.
Can you give these examples, or at least one? I want to hear it.
There's so much, but just the very notion of a initial sale to sort of venture capitalists, right? Which I am one, of course. So no one's perfect, but the notion of selling a share of an asset that you believe will be a global monetary good that everyone will one day use, right? If you really believe this, and that's sort of the inherent claim in any new cryptocurrencies, that it will become globally important, right? That's the return profile you have to expect to believe these things. Selling, 10 or 20% to a venture capital firm or a hedge fund or, a wealthy individual, and believing that doesn't delegitimize the project as it grows into something worth hundreds of billions of dollars is insane, right?
Are you talking about WorldCoin?
Literally anyone, any single one that was venture backed, right?
Yep.
The only sort of authentic way to issue a new currency out of thin air is to make it costly to obtain.
And are you considering every protocol and every token here as essentially a form of money?
Well, some of them are just pseudo equity, right?
Yeah.
Some of them are like, you get network equity and, some smart contract that spits off cash flows, and, maybe I get that token entitles me to a claim on that. So you do have to assert that taxonomy. But your generalized layer ones, they all aspire to be money. And that's not a secret. That's what they tell their investors. That's what everyone's buying into. That theory, hey, this thing could flip in Bitcoin or could match Ethereum, right? That's the claim. And the idea that some Silicon Valley firm can own 10% of the world's future wealth, were that to occur. Of course, it won't occur, but is preposterous. So that's sort of the original sin, frankly.
Yeah, I've taken quite a bit of an issue recently with this co-opting of Web3 to now mean blockchains. Web3 this has been long discussed back when I had my agency over a decade ago. Web3 was discussed before Bitcoin even existed, but now it's been co-opted as a world of tokens, and I've seen very prominent investors talk about this. Chris Dixon from A16Z is very prominent talking about this at the moment, and I just feel like there's a co-opting of this for their own personal interests, and it doesn't feel like this is the decentralized version of the web that was predicted.
Yeah, I mean, I don't think anyone knows what Web3 means, frankly. I don't know if we're going to be talking about Web3 in a decade's time. To the extent it means, having more ownership over your online self and having, genuine digital property, and maybe using a public key infrastructure to sort of engage with digital systems, online systems, as opposed to surrendering your identity and your credentials to a third party. There's something to be said for that.
Mm-hmm, I agree.
None of that implies or requires a token of any sort. That's a non sequitur, right? So I don't know exactly what it is that Web3 is, frankly.
Well, Web2 was more retrospective. It was during a period of time where devs were working on ideas, developing a more interactive web. You went from static HTML pages to interactive pages using CSS. So when people did searches, it would come up with the results. And it was more retrospective. It was like, okay, yeah, this is what Web2 is. We've created this stuff. Great. I feel like there is an attempt by people with an interest in their investments, perhaps because, I don't know. I mean, Chris Dixon threw Facebook under the bus the other day, an A16Z investment, as part of his explanation of why he believes in Web3. I just feel like it's an attempt to shoehorn a narrative to where they want to put money, where they can see returns. The big issue I've had with these, and I steal this line essentially from Jill Carter. Well, she's changed her name now. She's got married, hasn't she?
Yeah, formerly Jill Carson.
Jill Carson, I can't remember. But Jill Carson, when I met her years ago, she said one of the great things is they get to do their seed round and IPO at the same time, but actually they're going to do an IPO before they've had product market fit, which to me is fucking ridiculous.
Yeah, that's sort of why we have securities regulations in this country. But that is the interesting thing about Web3 to me, is like aspiring, actually looking back to sort of the earlier days of the internet when people ran their own email servers and things like that, right? And so it was more genuinely decentralized, right? And kind of trying to recreate that, in the kind of the same way that sort of Bitcoin is trying to recreate the gold standard. I think Web3 is also kind of backwards looking in some respect, of aspiring to these days before Silicon Valley tech firms controlled absolutely everything, and trying to reassert some personal autonomy. But yeah, none of that implies a token, but it's just that we live in this world where you can't just have an idea and support an idea. The idea has to be monetized. And so you can't just be enthusiastic about a concept now. It has to be connected to an investment thesis too.
Yeah. Okay, so trying to think a little bit longer term, Nick, and I'm sure you do think about these things, but like I say, I mean, maybe you thought this stuff would happen. I always felt like Bitcoin would be an asset and be something to invest in. I just didn't see the El Salvador situation happening. Certainly not now, maybe years ahead. But trying to think next 5-10 years of the role of Bitcoin and how it's going to be changing. We do have a situation where Bitcoin is starting to appear to challenge gold. There are a lot of gold bugs who are becoming maybe gold bugs and Bitcoiners, or some completely flipping. Michael Saylor is, he considers gold the enemy of Bitcoin. We are at a time of kind of weird inflation numbers, whereby we've been told a certain inflation number, but actually inflation is very subjective to yourself, and most people are expecting or talking about they're in a situation of double figure inflation. Where do you see the evolving role of Bitcoin over the next kind of 5-10 years? I know that's a big question.
Yeah, I want to address the gold thing first.
Yeah, do it.
So I find it preposterous that Bitcoiners are hostile to gold. I know you have a Peter Schiff photo right there, but
yeah,
Peter Schiff is our greatest ally, okay?
You think?
100%.
Okay.
100%. And I'm honestly aggrieved when Grayscale, they run their drop gold campaign. That's insane. The same set of ideas that causes a man to embrace gold cause them to entertain the idea of Bitcoin.
Oh no, I agree with that. I mean, I keep bringing up my brother because we talk so much, but he constantly refers to Peter Schiff and sends me his tweets, and he keeps saying to me, "We agree on the problem," to the point where I keep retweeting Peter Schiff and saying, "We agree on the problem."
Yeah, I mean, we have slightly different opinions regarding the solution, but the vastly more important thing is to diagnose the illness, right? And then, the precise course of treatment is like, okay, well, do you want to take, this antibiotic or that antibiotic? They do the same thing, right? They do the exact same thing. Gold is proto-Bitcoin. I mean, gold is analog Bitcoin, right? Bitcoin is digital gold. They're two sides of the exact same coin. If you like gold, you're skeptical of the state's ability to manage its currency. It's the same with Bitcoin. Gold's not going to cease to exist. Gold has this enormous cultural salience. Bitcoin will not demonetize gold. I mean, maybe, some of the gold that was in ETFs, maybe that'll go into a Bitcoin ETF eventually. But gold will never cease to exist. I mean, it's an element which has remarkable properties, like truly remarkable. And you can't just scrub that from our collective memory. And I don't really own any gold, to be clear. But the important thing is that people are skeptical of the monetary discretion of governments, and they look to store their assets in a pure monetary medium that is outside the control of the state. And, how precisely you choose to express that is a kind of an afterthought. But, just getting people on that same page is the difficult thing. And, here's another instance where, gold has these parallels with Bitcoin. So, when we were debating the gold standard, whether we should return to it, there was a huge debate among Austrians about, and frankly, their ideological opponents about the costs of a gold standard, right? And it was alleged that a gold standard would be too costly from a societal resource perspective, right? I think Milton Friedman wrote something like a gold standard would cost 2% of GDP a year just to maintain and extract the gold. Now, that estimate, I think, was erroneous, but the point was it was considered to be exorbitant to have this inert, metal effectively being monetized and being a medium to store wealth when we could just simply create paper currency, right? And once you realize that the paper currency is incredibly costly in its own way, in a different and more oblique way, once you have that realization, you understand why it's important to store human wealth and time and ingenuity in this non-state monetary device. And so, of course, there's the same debate that happens with Bitcoin, right? Bitcoin is too costly from a resource perspective to maintain. Why do we need it? We can just have paper currency. Like, who cares about Bitcoin? We don't need that. We don't need to spend 30 basis points of global energy on this thing,
Well, Nick, specifically in the UK, referring to our chancellor, who has coined the term Bitcoin for the potential CBDC of the UK, it's why do we need Bitcoin? We have Bitcoin.
Right. Yeah. So why do you need it? We have CBDCs. We have this wonderful government money which costs nothing, right?
It's energy efficient.
It costs nothing until it costs you everything,
Yeah.
right? So, that's the Bitcoin and gold are so close on sort of the ideological family tree. They're like apes and gibbons, they're right next to each other. And whereas, sovereign currency is like in a completely different genus, So, I find it so disappointing when Bitcoiners go to war with gold enthusiasts because they're there for the exact same right reasons, and honestly, there are valid reasons to prefer gold to Bitcoin, no question about it.
Yeah.
I mean, it's a physical, physically instantiated thing like this. Of course, I think Bitcoin vastly outperforms it in the important domains: transmissibility, auditability, right? Obviously, it's more fractionalizable. It's kind of easier to store in many respects. There's a lot of good stuff to say about Bitcoin. I don't have to sing its praises.
I haven't got rid of my record collection, but I don't travel with it. I travel with Spotify.
Yeah. Gold just has a lot of momentum. You're not going to be able to, governments own it. a lot of gold, and you're not going to be able to undo that overnight.
No, but my expectation is there's like a transitionary phase that might be multi-decade. I mean, you are of the belief that governments will eventually adopt Bitcoin beyond El Salvador alongside gold.
Of course, yeah. And here's my proposal to a government official that's listening.
Let's go.
You should just simply buy the equivalent amount of Bitcoin that you hold in your official gold reserves. It's so simple, right? Because all you need to do is hedge against a world where there's a Bitcoin standard, right? And you want to be no worse off, right, in that world than you are in today's world, where gold is kind of the de facto monetary good that governments hold that's not U.S. treasuries or foreign currency. And actually, central banks have been buying a lot of gold, if you look, because they're kind of fearful of well, they buy all kinds of stuff, but they're fearful of the dollar depreciation. So how do you get from today's world, which is where governments hold a lot of gold, to tomorrow's world where maybe there's Bitcoin and gold side by side as the official non-state reserve assets of choice? Well, you just simply work out what percentage of all the gold you own, and then you just buy the equivalent amount of Bitcoin, right? So there's around 200,000 tons of gold that have been mined, give or take, above ground gold. The United States has about 8,000 tons of gold.
Allegedly.
Yeah, there's no way to do proof reserve on gold,
No.
let me tell you. So they claim to have 8,000 tons of gold, which is the most of any government. So how did they become no worse off under the Bitcoin regime as compared with the current regime where gold is demonetized, but it's still important? Well, you simply just work out the ratio, right? So that's 4% of all the gold they have. It's a lot greater percentage of all the official gold, but it's, all of the gold matters. So what's 4% of all the Bitcoins?
600, no, what
Close.
is it?
It's about
700,000?
840,000, I believe, of 21 million. We're just
Yeah,
going to...
210 times 4.
Yeah, so, it's fewer than 1 million Bitcoins for the U.S. to tread water, to stay just where they are. And what would that cost them to acquire? Less than $50 billion. Now, that's a pretty cheap option to get into the future if you want to be no worse off than you were under the current model, where you still have this enormous gold reserve.
What's the circulating supply? I thought it's around 2 million Bitcoin right now.
Yeah, I mean, there's maybe 4 million Bitcoin that are kind of lost or inaccessible in a certain way.
But the actual, liquid circulating supplies.
Yeah, but, the thing is that even the illiquid supply matters, because if the price goes up enough, that will induce people to bring their cold storage back online and make it market relevant once again. So you really need to determine what's truly, truly lost, and, that's probably 3 to 4 million Bitcoins.
Why do you think governments are reticent to start accumulating? Well, it's probably a double question. Reticent to start accumulating Bitcoin, or do you think some already are?
Yeah, they're reticent to tell us about it.
Yeah. Because
for the duration of the time that you're accumulating Bitcoin, you're not going to be public about it. That'll just make your cost basis much higher.
Uh-huh.
So, what a sailor should have done would have been to secretly acquire all his Bitcoins. He would have been able to do it much more cheaply. So if I'm, the Singaporean, sovereign wealth fund or something, I'm not broadcasting that I'm acquiring Bitcoin. I don't know if they are, to be clear. They're probably not. But any government that is acting on a decades-long time frame and is, secretly hedging their exposure by getting access to Bitcoin in whatever method, they have no incentive to talk about it. So we'll only really learn after the fact. So it'll be a secret.
But do you think it's happening?
I wouldn't be surprised.
Yeah.
There's other nations that kind of have official relationships with Bitcoin, aside from El Salvador. El Salvador was not the first. It's just that the other nations are pariah nations, right? North Korea, it's not a secret at all that, the North Korean state-sanctioned hackers were behind the hacks of a lot of crypto exchanges. That's a cost-effective way to get Bitcoin, right? It's not a secret that, the Venezuelan regime confiscated people's ASICs and the state secret police are mining the Bitcoin. Or that the Iranian central bank, they even put out a specific missive about, Bitcoin reserves, Bitcoin-denominated trade, and things like that. All those states are excluded from the financial system, and so they have a strong incentive to get this alternative transactional medium and to get these reserves, which can't be seized or confiscated. If you look at Afghanistan, when the Taliban took over, their reserves, their dollar reserves were inaccessible to them. So it's no secret that sort of autocrats and despots, the world over, it's not a surprise that they should want, this monetary system, these monetary units that can't just be turned off at the click of a button by the U.S. government. So El Salvador wasn't the first. They were just the first sort of vaguely Western nation to embrace Bitcoin.
What do you make of El Salvador? Because they are very much becoming the MicroStrategy of countries, the first to do this. Bukele is tweeting out all the Bitcoin memes. They're buying the dips. They are about to issue this bond.
Yeah, I think Bukele got an enormous personal dividend out of it, which is that now he's known to all these Bitcoiners worldwide, and really just his fame skyrocketed as a consequence of doing this, right? So there's a big payoff for him. The question is, will there be a payoff for the Salvadoran people? I think that remains to be seen. I think there's a lot of cynical takes out there in the press about, Chivo was buggy at launch and stuff like that, which is silly. It's like
software.
It's like the U.S. government couldn't create a healthcare website. So
yeah, exactly. And let's be honest about CBDCs. Do we believe that however they launch it, whatever blockchain they choose to use, that will have 100% permanent uptime?
They don't even exist yet, right? No. So we're comparing a deployed system to something that's theoretical. Of course, the theoretical thing might seem better, but at least, he gave it a good old college try. Right?
I think the Obamacare website analogy is pretty fair.
I mean, that's that's the most powerful nation on earth. So, I think they did well, all things considered, probably. But yeah, I mean, we'll see if it's actually accretive to the Salvadoran people. I mean, I'm withholding judgment on that front.
Yeah.
I think they're certainly smart to diversify their official holdings into Bitcoin. They just have to follow the formula that I laid out for them, and I don't even know if they have any gold. They might be better off.
They do. I think it's 1.7 tons or 1.3 tons of gold.
Then they're almost undoubtedly better off for the Bitcoin standard than they were under the old regime.
Yeah,
so
it's like $78 million in gold. I'm pretty sure Danny would probably be able to check that. But
7.2 tons.
7.2 tons, is it?
They're killing it in Bitcoin world. So
1.3 tons.
1.3 tons. I was correct. I knew that.
They have an incentive. So less than $100 million of gold, I think.
$78 million, I think it was. Yeah. Yeah. What do you make of the bond, the volcano bonds? Because the game theory of it is kind of interesting in that if they launch 10 consecutive bonds, they could potentially take $5 billion in Bitcoin off the table if half of each of the $1 billion funds goes into buying Bitcoin.
Well, they need to find buyers for the bonds, right? Well, I don't know if the offering was subscribed. I haven't been following it, but I mean, I think Matt Levine's take is basically correct, which is you can get the exposure of the Salvadoran bond just by buying generic Salvadoran debt with the same maturity and by buying Bitcoin. And that exposure will be more efficient than if you do it through the product of the bond, the Bitcoin bond. Yeah. So there's alternative ways to get that exact same financial risk if you want it, as opposed to buying the structured product that Bukele is offering. And, the only difference is that you can buy the Bitcoin bond on Bitfinex, and it can be a crypto adventure, and you can get your residency in El Salvador by doing that.
Yeah.
But from a financial product perspective, frankly, it's inferior. I hate to say it. But, at least it's creative.
Do you think Bitcoiners are being objective enough about Bukele and using enough of a critical lens? Like, I've obviously met him and interviewed him, and feel like personally I perhaps haven't been objective enough about him, or critical enough, or cautious enough with regards to him. And the reason I asked for this is we had a kind of rug pull from Elon Musk at one point, where he went from hero to zero. He was our Bitcoin guy. He bought 1.5 billion Bitcoin, and then he did his energy FUD rug pull on us, and then promoted shitcoin after shitcoin. I wonder if there is a short-term risk to Bitcoin in the Bukele situation, perhaps going south, and that is a reputational issue for Bitcoin, but is used by international institutions to attack Bitcoin.
Bitcoin is money for enemies, Peter.
I know.
We have to acknowledge that evil people will use Bitcoin. I'm not saying Bukele is evil, but we know that the worst people on earth use Bitcoin. Disproportionately, probably.
Yeah.
I mean, they use the dollar too, right? That didn't delegitimize the dollar. The best monetary network is the network that doesn't exclude anyone, regardless of how odious they are. So, you know,
that's not what I'm asking, though.
Oh, yeah, there is something about what you're saying. I mean, I think you've been fair in your interactions with Bukele. I very briefly interviewed him. I tried to be fair, not overly sycophantic. That's been the accusation, but people will use anything they can against us. They'll accuse us of anything. I mean, I don't even know if he's strictly considered a dictator yet. I mean, he jokes about it. I don't know what the definition is.
It's funny you should say that, because I asked him that in the interview.
If he was a dictator.
Yeah, and he said, well, what is a dictator? And I was like, well, funny that I actually have the definition here, and I read it out to him.
Merriam-Webster dictionary.
I think it was the Cambridge Dictionary. But I think that's to be proven longer term. That comes down to what happens in the next election, yada, yada. But
all kinds of awful people use Bitcoin. And as I said before, you know, pariah nation states that conduct atrocities use Bitcoin, have Bitcoin, are mining Bitcoin, are obtaining Bitcoin. Bukele is certainly not as far on the authoritarian spectrum as Kim Jong-un or Maduro.
Yeah.
But yeah, it's you know, reality is messy, right? We don't get to choose who adopts Bitcoin. Certainly the countries and individuals that benefit the most from the dollar institutional system are not going to be the first ones to adopt Bitcoin.
It was Peter Van Valkenburg's Senate testimony where he eloquently put, and I won't do the same, but he said for every, you know, we talk about criminals using Bitcoin, and for every criminal who does, let's also talk about, you know, a person in, I don't know, Belarus, who's fighting against Lukashenko, is using it to, you know, usurp the state so they can actually be paid and protest. And let's talk about people in Nigeria, and let's talk about people who don't have access to bank accounts. So he kind of tried to give that balance when he gave his Senate testimony.
Yeah, Bitcoin, it works to the benefit of the excluded, right? Yeah. And, you know, just literally look at the data. Look at the Chainalysis adoption data. What are the countries with the high per capita penetration? Nigeria, Vietnam, India, Colombia, Venezuela, Ukraine, other parts of Southern Africa, Eastern Europe, Southeast Asia, right? Latin America. These are not, you know, your centers of global commerce necessarily. But, you know, this Chainalysis publishes this data, right? It's pretty evident. It's the global South that is disproportionately adopting Bitcoin. So, you know, it's no wonder that, you know, the Bank of England and the Fed don't understand this thing. It's not even strictly for them, you know. You benefit from the established system. You have no incentive or desire to seek an alternative. But look where this thing is actually being used on a per capita basis.
Okay, let's talk about hyperbitcoinization, because it is a theory a lot of Bitcoiners talk about. I think it was Pierre Rochard wrote about it on Nakamoto Institute. It's something that comes up a lot as a given. People don't talk about if we hyperbitcoinize, it's when we hyperbitcoinize. I know you're not entirely convinced. I want to talk about it with you because I like the fact that you're not entirely convinced. Can we try and come up with a definition of what we might agree on what hyperbitcoinization is? Like, we tried to do it earlier. My loose attempt was to say perhaps it's a scenario where within a country it is the only currency you have. Might be a scenario. Others might say it's a scenario where it's a stable global currency and perhaps number of nations. I don't know how to define exactly what it is.
Yeah, I mean, I obviously remember reading all the Nakamoto Institute stuff, and it was pretty entertaining. I'm not even sure it's Pierre Richard that wrote that one.
Was it Daniel?
It might have been Daniel Krawitz.
Yeah.
Yeah, and it was a fun article. I'm not sure it was intended, seriously. I mean, I don't know if it was written with a straight face, right? The Nakamoto Institute stuff was kind of like, like parody in reality. It was fun, thought-provoking stuff, but it's not necessarily, this is a prediction of specifically what I think will happen. Right?
But some of it did. The speculative attack has become true.
Right. So yeah, I think we're sort of asking too much of the authors of that piece if we are treating it as doctrine, because maybe it wasn't intended to be, a serious assertion.
Thought-provoking instead.
It might have just been like a fun thought experiment. And, I don't know of any economists that advance a theory of hyperbitcoinization, whatever it means. I think it's probably a play on hyperinflation.
Hyperbitcoinization is the inflection point at which Bitcoin becomes the default value system of the world.
Okay, so that's more of a unit of account story.
Yeah, that's Bitcoin magazines.
So that's when you redenominate everything in Satoshis. Do I think that's ever going to happen? Absolutely not.
Because it's always volatile against another currency. There's always exchange rates.
It's kind of volatile by design. Bitcoin is perfectly inelastic from a supply perspective, which means that its volatility will not attenuate, most likely. It is very rigid from a supply standpoint. That's what we like about it. So it's a blessing and a curse, or it's a poison chalice. So, Bitcoin can be incredibly useful and important and influential and so on without being the unit of account. What we're seeing right now, as I talked about earlier, is Bitcoin being a collateral type which powers an established unit of account, like the USD. But you can, of course, with any of these algorithmic systems, determine any unit of account you like. It doesn't have to be indexed to the dollar. There's absolutely stable coins that have kind of arbitrary unit of accounts. Mm-hmm. There's one I can't think of right now. It might be Rye, which is started at, I want to say $3.14, and it just kind of floats along. So it's not indexed to the dollar, but it is intended to be stable, right? Mm-hmm. So that's sort of the beauty of these programmable, configurable systems, is you can determine any unit of account and then create a system which sort of tracks that. And maybe dollars aren't the best one. Maybe people will want to trade goods in an index that tracks property prices or commodity prices. But for now, dollars are the dominant one. And if you look within the crypto space, dollars are absolutely the dominant unit of account. A few years ago, Bitcoin was, it was the currency that you denominated your altcoins in, right? You would say, like, this thing is 300 sats or 400 sats or whatever. That's not really the case today, and that's okay. It's not even strictly the dominant medium of exchange in its own industry, and it's not even strictly the dominant unit of account. It definitely isn't in its own industry. So how can we expect that to externalize and if it can't even conquer the crypto space, right? And that's not me being, a pessimist, or it's just being realistic. How do we expect global trade flows to be redenominated in Satoshis if people won't even trade on exchanges in Satoshis?
So you think the idea of people pricing oil in Bitcoin is unlikely, long way off?
I think Bitcoin could and will be traded for oil, but that doesn't mean it'll be priced in Bitcoin terms.
So do you think a more useful term or topic to talk about rather than hyper-Bitcoinization is more of a Bitcoin standard?
Yeah, I think so. And a Bitcoin standard to me is, that's probably, I defer to Safety on the definition of that. But the way you defined it was good, I think, where, Bitcoin is your dominant savings device. It's the main medium through which you store your wealth and your time. and then you might transact at the edges in other currencies, right? And you might convert it to other things, but it's sort of your dominant savings device. And a Bitcoin standard is a world I can totally imagine and perceive, and I think is more likely to happen than not at this point.
Well, like I say, I think it is happening.
Yeah, it is.
Because it's individual. Happening. You get the choice. Like I've said I do. I believe MicroStrategy are a Bitcoin standard business. I believe El Salvador is heading towards being a Bitcoin standard country. And you and I, there's 4 people in this room. You and I can be on a Bitcoin standard. They don't have to be, but we can still maintain that.
Yeah, 100% of the population of this house right now is on a Bitcoin standard, so we're really dominating.
I'm not sure. Are you, Jeremy?
I keep sending you invoices in Bitcoin.
Do you?
Yeah.
You're not having my Bitcoin.
100%. So this tiny corner of South Florida is fully Bitcoinized, this 10-yard area. But, it's not just the countries, it's just not the El Salvadors and the MicroStrategies, it's the tens of millions of people worldwide that spontaneously adopted this thing. Mm-hmm. And they're on a Bitcoin standard too. And so that's...
I'm not sure everyone is. So again, we were talking about this morning. I think there's a difference between having Bitcoin and being on a Bitcoin standard. So for example, I believe MicroStrategy, especially having spent time with Saylor yesterday, explained to me is their business is on a Bitcoin standard. Whereas I believe Tesla owns Bitcoin.
Well, Bitcoin doesn't care, right, how much of your wealth is in Bitcoin. From the perspective of Bitcoin's monetization, Bitcoin itself is indifferent, right?
Of course. But the point being is, like, I think there is Bitcoin and there's being on a Bitcoin standard. And being on a Bitcoin standard is a choice to you. So it's personal to you how you treat Bitcoin. And what I mean is I think Tesla is on a dollar standard and holds some Bitcoin in its treasury. I believe MicroStrategy is on a Bitcoin standard.
Okay, I see the point you're making.
Yeah. I think they're two different things.
But if you think about, Bitcoin's apotheosis, where it might end up.
Yeah.
I think if it had a trajectory, such that it ended up somewhere similar to where gold is today, that would constitute success, right? And that might be seen as hopelessly conservative by the Bitcoiners. That would only imply one more 10x, which I know would be devastating. But that would be success.
Why so bearish, Nick?
Yeah. And, how do people treat gold? Well, they have some gold jewelry, and maybe they all own, an ETF, and they own dollars, which are kind of like really indirectly backed by gold. Well, not backed by, but, the U.S. has gold reserves. And, how do households outside of the U.S. treat gold? Well, they have their gold heirlooms, their sort of family wealth might be stored in gold, and maybe you give it as a gift, once in your lifetime when your daughter gets married or something. And gold isn't important, but it's not the only asset that they own, right? They own property and stocks and things like that. That would be a good outcome for Bitcoin if it achieves that level of cultural and economic penetration. That'd be a great outcome. Mm-hmm. I don't know if that would mean that everyone would be on a Bitcoin standard, but that's a world that I can completely imagine.
Yeah, I feel like it can't have a top though, because if we get a top, then people are like, this is the end, and they'll start selling out. Because in the end, I think number go up sometimes is more important to people than the moral implications of a Bitcoin standard.
Well, the composition of Bitcoin holders will necessarily change because the early Bitcoiners will have liquidity needs and they will need to consume, and so they will eventually divest, right? Uh-huh. They will be spending at a rate that exceeds their new savings ability, especially because the bulk of their savings activity would have been done historically when Bitcoin was appreciating. So the natural progression here is simply that the earliest Bitcoiners progressively divest, and later adopters come in, and so then the Bitcoin holder base becomes renewed and changes. And of course, that's what's happening. There's a lot of early Bitcoiners that currently hold very little or no Bitcoin. When people buy houses with their Bitcoin after a big rally, that's early holders divesting, and the distribution of ownership changing. So the expectations of the earliest investors and they matter less and less with time, is what I'm saying. So the newer folks may not see it as a failure if Bitcoin, only goes up 30% a year. that might be precisely accomplishing their goals, which is wealth preservation.
Well, a more consistent, less volatile growth in Bitcoin, I think, is better for Bitcoin. I try and imagine it happening and try and think through the scenarios, but then if that does kind of happen, then I think it ends up breaking itself, because that consistent, if you had that consistent 30% year on year, it's like, hold on, we can get a consistent 30% year on year. Well, then a lot of people will pile in, and then we'll see a blow off the top and come back down. So maybe we can never get that stability.
Oh yeah, I mean the psychological component will always be there with the price action.
Yeah.
But yeah, I mean I don't think decreased but steadier level of returns delegitimizes Bitcoin. That doesn't delegitimize gold. Gold did have these wild swings in the 70s, right? If you look at that inflationary period, gold increased something like a factor of 8 in real terms throughout the 70s as it became a device that people used to escape the dollar, right? So same thing on a grander scheme. Today, Bitcoin went from 0 to something, so the return multiple was enormous. But eventually it'll probably become less volatile and just a more quotidian, just normal thing to own.
Awesome. I had this whole other section I wanted to go into, but I think that might end up being a whole show itself. So I think that might be a good place to finish it.
Okay.
I think that was a good chat, Nick.
Thanks, Peter.
It's good to do in person, man.
I can't believe this is the first one.
I know. Well, listen, we're back to touring and trying to do them in person. We'll be in Miami a couple of times a year, so we can get to some deeper subjects another time. But I appreciate you coming on so many times, man. I really appreciate you. It's good to have you as a friend and as a fellow Bitcoiner and as a guest on the show.
Yeah, and I have a bone to pick with you saying Lynn is the most frequent apparent guest because she had an arranged thing. So this
is a fair criticism.
She was semi-affiliated with this show.
Nick is the most regular guest on the show who isn't a scheduled monthly guest. He is the most regular guest on the show.
Thank you. I happily accept that. If you'd ever make plaques, in terms of, or trophies.
We
need to make a t-shirt.
We should do a t-shirt. We'll do the Nic Carter is the most regular guest on What Bitcoin Did t-shirt.
And there's some podcasts that have their own DAOs now.
Yeah.
Podcasts which will go unnamed as their competitors to this show.
Yeah. Is Bankless? I bet that's Bankless.
Bankless is a DAO.
What Shitcoin Did. That's what we call that show.
So, if you ever make one, I mean...
No.
The pre-mine, you should reserve.
No, there's no pre-mine. I want some money off you for my football club, but we'll talk about that another day. But listen, Nick, thank you. Tell people how to find your podcast, because we...
I have a much smaller, but...
Far more intelligent.
Competitive podcast called On the Brink. I think at this point we're actually over the brink, so we might have to rename it. Yes, you can find that on the podcast websites.
All right, man. We'll share it in the show notes. Nick, good to see you, man. Love you, dude. Take care.
Thank you.